What is going on YouTube? It's Sankey. We're back with another one. Hey, before I kick things off, if you're looking to level up as an investor, check out the link down below to the Patreon and join our team of investors over at the Discord. Alright guys, so I'm coming at you with a couple of plays to load up on, but before I get to it, I'm going to need you guys to hit that like button for me, and if you're new, hit that subscribe button, join the journey. So just as I was saying yesterday, the market can't make up its mind right now. One day it's green, one day it's red, but I need you guys to stay focused, stick to the strategy that is continually pick up these cheap plays on the dip that have good growth potential, and you guys know I'll hand them over to you on this channel. So remember, keep your investing hat on, take a long-term view with these plays, and don't worry about the daily fluctuations in your portfolio. Now, I interact with a lot of you guys down in the comment section and over at the Discord, and I must say right now you guys are bossing it, so just keep it up. Now, in this video, like I mentioned, I've got a couple of plays I'm going to put on your radar for you guys to load up, add to the portfolio, or increase your existing positions. But before I get to those plays, got to do some housekeeping, and some of you guys know what's coming. Alright guys, so we got IQST. Now when you open up this play in the Trading 2-on-2 app, you'll see new buy orders for this instrument have been temporarily restricted. So saddens me to say this, but 2-on-2, they're up to their usual shenanigans, interfering with our plays, interfering with our money. Not just any play though, this is one of our channel MVP plays. Now this feels like a death within the family, but nevertheless, if you guys have been sticking to the script, sticking to that blueprint, you should come out of this one with no scratches, because I gave you guys the entry points, and also only a couple of weeks ago when IQST was flying, I did say to you guys take a significant amount of profits out of the play and also set your stop limits on this one so it can cash you out in case of any downwards volatility. So it's only when you guys start going off track and doing your own thing and grabbing the play too high, that's a different matter. So I want to give you guys an update from my side. I'm now 100% out of IQST. I took 50% profit when they're trading near the $2 mark. Then my stop limit was triggered and kicked me out of the rest during this downwards volatility. Now for those of you who've been following along closely, you know we've exited this one profitably. That's not paper profit, that's actualized real profit made on this play. But the real loss with this one is the potential upside, because we know IQST are doing what they need to do to succeed. We know they're on track to hit their revenues. I like their business divisions and everything is moving along nicely. However, this buy restriction changes the whole dynamic of this investment. So we got to bounce and move on to the next one. So moving forward, we're going to park the OTC stocks. There's too much uncertainty with Trading 2-on-2 getting involved. So it's going to keep our focus on those main exchange listed plays in the NASDAQ or the London Stock Exchange. Up on screen, that's FinTech Acquisition Corp 5, ticker symbol FTCV. Now this is a SPAC that's bringing eToro online. Now guys, when it comes to these SPAC plays, I'm very selective with which ones I choose to add to the portfolio. During the whole EV SPAC blow up phase that we had last year, I cherry picked the ones because there's a lot of SPACs out there and you guys need to know they're not all good. And there's strict criteria that I run through to select these SPACs. Now, eToro, they're a rapidly growing platform. They've got around 20 million users, and in the last month alone, they added 1 million. This isn't to say that same growth trajectory is going to continue moving forward, but I do think they're going to pick up a lot of members, a lot of new investors onto the platform as we go through the year. And we know retail investing is picking up steam, it's blowing up right now. Not only that, they've got some crypto on there as well, so that's an added bonus. So currently standing at $15.26 this one. You can see they've had a very good day, but guys, we're going to be strategic with how we approach this one. With these SPAC plays, we know day one they always blow up. What we're waiting for is a pullback in that stock before pulling the trigger on this one. So ideally, if you grab this in the 13s, maximum in the 14s. Let's talk about SPAC play price dynamics. We've seen it several times. That stock price comes down after merger announcement. We've seen it happen to ChargePoint, seen it happen to CCIV, just to name a few. So if you're jumping into this play, it is mandatory, not discretionary, absolutely mandatory to set your stop limits on this one to protect your downside. Now I know a lot of you are still getting used to setting your stop limits and your trading stop losses if you have that tool available to you, but guys, get used to it. It's going to save you and it's going to protect you from bag holding if there's any downwards movement in that stock. Now eToro, they're far from a finished product. There's a lot they can do to upgrade. So if they can use this capital, they're going to raise from this SPAC merger to improve their interface, get new stocks onto the platform, also improve their exposure to the digital currency side of things. This is going to give them good upside, and this makes a good long-term investment because, as I said, I expect a lot more users coming onto the platform. They also stand out as one of the only few retail investing platforms on the market right now. So like I say, this is a good play. We just want to wait for that pullback before pulling the trigger in this one. I remember, guys, when you're buying into these plays, we're nibbling. So we're doing smaller transactions. We're not shoveling Lambo money down on any one trade, because you might be able to get a better price the next day or the next week. As investors, it's all about steady, well thought out moves. Our next is CleanSpark, ticker symbol CLSK, currently standing at $22. Now they've dropped down 23% on the day, but that just opens up a buying opportunity to pick this one up, add them to the portfolio. If you don't already know, they've announced a stock offering of $200 million. Now with these stock offerings, we've seen several over the last couple of months, numerous plays in the portfolio from NIO to Tesla, all of the Bitcoin mining plays. This is very common now. And these companies just use it to get extra cash to fund their business, grow and scale. Now with these stock offerings, I see them as short-term pain, long-term gain. And it's good to see a lot of the Discord members picking this one up and them to the portfolio. I'm trying to get you guys, when you see these plays in the red, look at that as a great buying opportunity. Don't look at it as you've lost money. The short-term fluctuations in that stock price, that's just paper movements. This one is going to succeed. We know they have their Bitcoin mining division, they got their energy division. Now this is a powerful combination because the Bitcoin mining takes a lot of energy, but they've got that energy side. They're specialists when it comes to energy. And if they're able to marry these two divisions, that is a potential for success right there. Now this is a play. They're going to use that 200 million to fund more miners and invest into their energy division, their energy products that I've mentioned to you guys about before. So like I say, I think they're going to use these funds wisely to scale, grow and fund their business. You guys know I've got a price target end of year of $50 on this play. Alright guys, been rocking with the channel, you know what time it is. Now this question comes from Michael, says, great content, I've been following and making trades using your knowledge, much appreciated. What's your opinion on rising bond yields, inflation and the impact on the market of a recession or even a depression? Do you think this is possible? And how do we prepare for stocks to drop 40 to 50%? Do we keep calm and go along and keep buying and bringing our average down for a couple of years? Or do we use our weak hands? So firstly, I appreciate you for sending this in. There's a lot I want to dive into and a few things I want to clear up here. So let's kick things off with you mentioning what's my opinion on bond yields and inflation and the impact on the market. Well, look, right now we're going through that hypersensitive phase where bond yields are somewhat linked to the market, but I want you guys to know that phase is going to pass and stability is going to come, and then we are going to have an inflection in the market and it's going to be onwards and upwards. But before we get to that point, you guys should have already built out your positions, dollar cost average down, be locked and loaded, ready for the run up in the stock market, ready for the turn and into the bull phase. Guys, as investors, it's always about thinking ahead. Now you also asked, how can we prepare ourselves ahead of a recession? This is a great question. I want you guys to tune in with me on this one. So first, let me touch on inflation. I'm going to get to a recession. We know that there's potential inflation rises coming at some point in the future. Now, I've given you guys a couple of plays before that you guys should have built into your portfolio, which could potentially benefit from a rise in inflation. And one of them is Citibank. So if you don't already have a Citibank in your portfolio, now's the time to diversify and add them into the portfolio. It's all about diversification. This is something I always tell you guys, and this is a play that's going to give you some kind of protection against any rise in inflation. So when it comes to preparation ahead of a recession, there's certain plays you want built into your portfolio that cover off things like food, healthcare, consumer staples. These are industries that aren't going to be as affected during a recession. So think discount retailers, plays like a Walmart, plays like a Target. When it comes to the food side, cheaper food options like a McDonald's. Those are the kind of plays that you want built into your portfolios. It's all about diversification, guys. Now you also mentioned, should just keep calm and go along with the strategy. That's exactly what you guys need to do. You guys just need to ignore, detach it from your emotions and just stick to the blueprint. And that is buy these plays on the cheap, because you guys know you're investing into quality plays. It's only a matter of time before the market turns and it's onwards and upwards. And you guys have already seen some of these plays start to creep up. Some of you guys have reached out to me and said, you know, you're up 40, 50% or more on these plays that you've caught the dip in. Now there's one part of your message I do want to clear up. You mentioned, should you be dollar cost averaging down for years? It's definitely not a case of years, it's a case of weeks. As you can see, as I just mentioned, you can see a lot of the plays are starting to move upwards. Now I've been investing for a long time With these corrections, it's normally a couple of weeks, maximum a couple of months. So we are going to move into the phase where it's going to be onwards and upwards into the bull run. That's why I'm trying to get you guys to prepare right now, build out your portfolios in quality plays I'm giving you guys over on this channel, so we can get you guys building some serious wealth in the stock market. Alright guys, that wraps things up. Do hit the like button for me, helps the channel out, and if you're new, hit that subscribe button, join the journey. Also check out the link down below to the Patreon, we can get access to our Discord and join our team of investors over there. Now as I always say, check into the channel each and every day, stock market's rapidly moving, and I'll catch you guys in the next one.